Hey traders, Mark from Trade and Train here, just going to have a quick run through a couple of charts, but more importantly, is it right now the time to be buying gold? Well, as fundamentalists and economists out there are talking about inflation potentially coming into the horizon and all different factors in terms of uncertainty and growth of economies, everyone's pointing towards the time to be buying gold as a safe haven asset class that's about to go through a significant growth spurt. But is it really the time to be buying right now? Well, let's see what the charts say. And, at the end of the day, we will have a fundamental bias based on what commercial entities are doing. And that information comes from the COT report. But then we also overlap that by looking at our technical perspectives on the chart. So top left chart, we've got the daily. Top right is the 4-hour, bottom left is the hourly, and bottom right is the 15-minute. So let's just take a look at the higher time frame. We'll just take a look at the daily. And if we just zoom in, we've got pretty much all of 2020, the latter part of 2019. We can see that gold had a significant appreciation in value from just under 1400 right up to just short of 2100, and that was mid to late August. Now since then we've been on a correction path, so that means the price of gold has been, although there's been rallies, it's predominantly been depreciating in value since August. Now if we just take a look at this in terms of the mechanics and the movement of it, we can see that the highs predominantly, if we just now move this across and then we start looking, not what I meant to do, sorry guys, if we then just start looking at each high, and we can see that that is progressively just moving a little bit lower, and then we had that little bit of a rally from when price tested 1760, came all the way back up to 1960, and then last week we had that big sell-off and it came down to 18, just above 1800s. Can we see the market run any lower? And according to the technicals and what I'm seeing right now is I do believe we could see further selling of gold. And what's going to cause that? Is it the selling and the short contracts being held from the commercials? Well, I won't see that data until Friday night. Now what the chart is showing me is we've got a falling wedge pattern. So if we just look at the, let me just bring in the screen drawer so you can hopefully see this right now. So basically what we've got happening here is we can see price moving from high, then a corrective phase, impulse lower, then we start having that movement back up to the high. So we've now got two tests, then we have another impulsive movement to the downside, and then as we're coming back up to test the upper part of the descending trend line, we see the impulse, correction, and then we break through, and this movement here will have caught a lot of basically bullish buyers of gold. This will have trapped all those long traders of gold into the market, and this is why you probably had such an explosive sell-off, because not only were the commercials actively selling it, but all these people that were trading the breakout of this descending trend line have been caught the wrong side of the market. And we could actually envisage that this was going to happen based on what we're seeing here, this chart pattern. We've got a rising wedge coming into our descending trend line resistance, and then the market rolled over. And if you looked at this on the weekly chart, as we were coming into the latter part of last week, we could see price was giving us a shooting star candle. Now it wasn't obviously fully complete at that point, but when it was coming in, the signal was pretty strong that we were looking for a sell point. And then obviously Thursday, Friday, we had that huge move. It took out everyone's stops. It actually played out the reversal pattern that we could see here, the rising wedge, which there was a lovely trading opportunity which some of our members got involved in, and I'll show you how they could have traded that. But where is the market moving next? And this is the clue. We've got another one of these small corrections coming in now. Now a lot of people have been trying to trade probably this candle long, and you could look at maybe trading it long into sort of 1880s if price is going to get up there. But we've got the monthly pivot that price is struggling to break through if we're being totally truthful about it, price really is struggling to break through. So in terms of looking for a short opportunity, if we're just going to come down to one of the smaller time frames now, let's take a look at the hourly. It's just a little bit cleaner. So you can see here now we've got multiple tests of, sorry guys, just hit the wrong, got the fat finger moment going on today. There we go. So we can see now how price has come into these key areas just through here. Once, twice, once, twice. Now the question is, will price push on and will we get that third attempt somewhere in here? Could well do. Now it doesn't mean that I'm going to be an active seller when price gets in here, because price could equally just drop down through our support trend line. So this is where rules become very important. So if you are looking to trade, if you are going to take an aggressive sell when price comes up to the upper trend line, then you've got to think about, right, where is it a safe place to put your stop loss? Well, you could be super aggressive and trade price action, but if it is a 1 hour chart, trading price action with gold, you'd like to see a little bit more confluence. So ideally I'd like to see, if we trade in the 1 hour, you'd want to see price give you a shifting cycle, something like that, and then you could put your stop safely above here, and that would give you a little bit more certainty, a little bit more confidence that the market has rolled over. Alternatively, if price doesn't come up to test a third time, whether it's up here or even at the higher time frame resistance trend line, then we can look for a break of what we call our CTL, counter trend line, which would be this trend line here. So we're looking for price to break through here, looking for a solid close below, followed by a lower low, lower close, and then looking for that corrective move back up before we short. So now we've got a game plan in place and we know what we should be doing if the market does one of two things. So we're basically going to say we're looking for short opportunities. Now where can we start looking for targets? Well, let's go back to the daily and let's just zoom out a little bit and see what price and the chart is telling us. So first thing is, when price forms these patterns, it will usually come back to test the low of these patterns. So I wouldn't be surprised if we got a test of 1775, 1780 on that next impulsive move down. If we look at this in terms of where's our 27 fib extension going to come in, well, we can see just in that area, 1780. So looking for price to potentially drop another sort of $70, $75 from its current price point. So that's a nice move. If we look at the minus 61.8, which is around 1725, that's basically looking to say, well, will the market push down and come down, and will we get our third test of our support trend line in line? And anywhere through this area, anywhere through the minus 27 down to the 1700s, this is where I'm going to start looking to accumulate my gold longs. This is where I see it as value. Where we currently sit right now, I don't see it as value. If we're looking for longs and price doesn't get down to where we're talking about, I've got to see price break through here, so we know we've got momentum back to the upside, and then as we pull back down, I'll be looking to see that first higher low for a long opportunity, where I think not only will we surpass the $2,000 in the previous all-time high 2075, I think we'll continue going a lot higher, as gold will be seen as that safe haven, diversification out of fiat currency, staying away from economic issues that's prevailing from COVID, sticking to those safe havens. And that's another market where we're seeing this kind of movement is Bitcoin. This is one that is really exploding, as are the other cryptos, based on the fact that it's an alternative asset class to be looking at investments. Now, things to think about. We don't really talk about crypto on here, but if you are looking at crypto, it is a very, very wild ride. Be prepared to sit through 80% drawdowns if you're holding something. An 80% drawdown isn't unheard of, and it's quite common. So don't be surprised. If you put £1,000 or £10,000 into a crypto, whether it's a coin, a token, whatever, don't be surprised if you wake up one morning and it's worth 80% of what you put in. So just be aware that anything that you do go into, understand the risks that are associated to each market. Gold is very volatile as well, so understand lot sizing. Make sure you know what lot sizing is. If you don't understand lot sizing, drop us a question in the comments in the chat box below in the comment section, and we'll get back to you about how to understand lot sizing and trading correct value according to your account size. If you've got any questions also about any other charts, please drop us a note at mark@tradeandtrain.com. If you'd like to attend any of our live and interactive masterclasses where not only do we talk about the different types of analysis, things that we look at in terms of seasonal analysis, commitment of traders, technical analysis, and fundamental analysis, you also can get a feel of who we are at Trade and Train, the services that we offer, and you can inquire about becoming part of our trader community, which is constantly growing. We welcome anyone that not only wants to get involved in trading but wants to be active within the community, wants to share ideas, wants to participate. We are a community that's growing, but we are all like-minded. We're all striving for a better cause, a better version of the person we were today, and a better trader than the person we were when we woke up that morning. So if you're interested in joining a community like that, again, please reach out. You can either email mark@tradeandtrain.com, james@tradeandtrain.com, or sophie@tradeandtrain.com, and one of us will get back to you with any sort of information that you would like to request. So on that note, I'm not going to finish off. I'm just going to have a look at a couple more charts because we were emailed yesterday to have a look at cable. So for those of you that don't know what cable is, that is GBPUSD, and they wanted to know what our thoughts were on cable and can it go much higher. So let's take a look. Technically speaking, we're probably somewhere around not the peak, but where it's due for a correction. So I think we're going to have a strong year for cable in comparison to what we've seen in previous years. Let's just take a look at where we currently sit. So we can see on the weekly we've had a rejection, and now we're in our third week touching that resistance trend line. On the support of the broadening wedge, you can see again we've had multiple corrections. What this shows us, this expansion, is that the market is pushing extreme volatility levels in terms of new highs and new lows. So there's no, what we can say, concise trend through here. Will the market come all the way back down here? I would suspect not. Will we come back into the support trend line? Well, that's a very good probability. So when we talk about the support trend line, we're talking about this white line here. Now, what happens through this area will be dependent on obviously a few economic factors. Pound got a bit of a buzz yesterday on the back of Bank of England, Governor Bailey saying that negative interest rates don't work and they're unlikely to be put into place in the UK. That gave sterling a huge push, about 150 odd points yesterday. But today we're seeing a little bit of a correction. More importantly, the correction not only is on sterling, it's on all major pairs. So the dollar's having a bit of a kick. It's rejected the 90 level on the dollar index. So where can we see cable going from here? Monthly pivot, this will be the first barrier, around 135s, so just under 135s. But ultimately, if we're looking for some sort of rejections, I would like to see price come down just below 134, 133.50, somewhere in this region. I'd like to see price pop down into this area, so somewhere through here, and then this would potentially give us an opportunity to look for that long move. Now, what happens is we always work on if done scenarios. So what that means is if the market gets here and it gives us a rejection candle, then we can start looking for long entries. An if done scenario would also say if the market gets here and breaks through and then gives us our candle formations which confirm that this is a confirmed break, then we would only look for sell setups, but that will take longer to come to fruition based on the fact that, you know, the market has to drop down and then correct before we can sell again. On that note, what was the other chart? Sorry, I'm just checking. Okay, it was euro dollar. Let me just remove those drawings and we'll take a look at euro dollar and give our forecasting for this. So I'm just going to remove this right now because this was a trade taken earlier. Things to take note of. Again, we've got one of these rising wedge patterns. We can see the market resistance, multiple rejections through here. And then we've got this red box highlighted from the previous week where as the market came into this zone, we also saw that we were getting another rising wedge, which was a lot more condensed than this bigger pattern we're looking at here. So as we're seeing that, we've got this rising wedge in here. We were waiting for a confirmed break and then for a correction before we can short. So what did that look like and how could we take advantage of it? Well, it was a really nice simple trade through here, and hopefully some of you got on it, which let's just pull in the 1 hour chart. So what were we looking at and how did we get on it here? Well, first thing you've got to think about is when price broke through our support trend line here of the higher time frame rising channel, we then want to see a correction before we get in. So we saw the consolidation, a shift in sentiment on the smaller time frame, and then again we get another rising channel here. So we're looking for price and momentum to fade, and then essentially looking for a structure point to bring this into confluence. So if we look left, we're looking for clues. Structure always leaves clues. We get a nice clean old support become resistance. We fire in our fibs. We can see that the market came nice 38% rejection with a rising channel, another correctional pattern. As soon as we got that market movement that closed outside, it was a very simple intraday trade here that was sell at market on the close of that candle, stops above the highs, target, monthly pivot, nice 2 to 1. And that was it today. Next, where do we see it from here? Well, again, it's time to sit tight. The market's made its move today. We're just going to watch this little sort of correction area here and see if we can find a movement that's going to pierce this tomorrow or the day after, and then we'll look for a correction and trade that down towards the 120.50 or the 120 even handle. So that's our analysis on cable and euro dollar. If you've got any questions, like I said, whether it's about joining the community or getting some charts shown like we were asked previously, just fire those in and we'll make sure we cover the charts for you. Thanks ever so much for listening, guys. If you did enjoy the content, please make sure you hit like, share and subscribe. And if you've got any friends that are interested in trading or starting their journey, please always remember to share our channel. It'd be much appreciated. Thanks everyone. Have a good night. Bye bye.